going on, everybody? Happy Mother's Day to all the moms out there, any of the moms that watch. I appreciate you, and I hope that you have a fantastic day. First and foremost, I just want to knock these ones out right away. Icon Meals, Jeff Navala on Twitter, and the t-shirts, Collins Smith on YouTube, and Peter Z and Stock God on Twitter. And if you notice, I picked 4 this week. So once again, I've extended, what you can do in order to have a chance, just so that maybe not everybody's on YouTube, maybe not everybody's on Twitter, but all you have to do is each night I tweet the link to scan. All you have to do is retweet, like that, and leave a comment in the YouTube comment section. And I will pick a bunch of winners each and every single week. One thing that I wanted to discuss before I get into the week ahead is just that idea that sometimes you have to lose, right? You just have to have one of those moments that, it defines your career. Every single fantastic trader that I know, every single trader that I've seen excel has had, one of those moments. And the trouble is, even after CXAI and after Top, people still ignored all of the signs on GSIT. And, I don't personally know anybody that got hurt, out of my group that I speak with, basically. But it's obvious that somebody was upside down, right? The stock went from 4 to 8 after hours. So it's clear that shorts ignored every single one of the warning signs that it gave. And so I just wanted to kind of revisit that because after hours, there was a situation and somebody that I actually have removed from the room just because, look, I'll be your punching bag for as long as you want, but at some point, you got to go. And so, for example, there's this one person, and I feel like a lot of people can relate to it because I do know that people's first idea is to blame someone else, right? Or to take it out on someone else. And, like I said in the prior videos, none of my discussions, none of my topics to discuss are I told you so's or anything to pretend or act like I nailed the long side, right? My goal is to showcase and continue to show the same situations happening over and over again so that you can prevent it. And also show you that not I told you so, but the warning signs were there, right? So we already talked about Top. And you guys already saw ahead of time at $7 the warning and at $15, the warning. So for me, it's not about, I called it, told you it was going to 260. I didn't. But I knew that it checked all the boxes and I knew that it had potential of outlier risk, right? Same thing on GSIT. So GSIT, we saw the 350 soak, we saw 390 reclaim, and we saw 415 trigger. Those were the 3 levels given all day. And when it goes sideways, flattens out for an hour or two, your edge goes down, your risk goes up, and it's a 50-50 trade. If it starts to check those boxes, soak at 350s, reclaim 390s, and trigger 415, you had all that information ahead. And as you saw, yes, I did warn about that. Yes, I did repeat myself, hey, if you didn't size down at 350s, 390s has firmed up, and be cautious if 415 triggers. And then right around 390 or $4 before the close, I said there's a good chance that this could run after hours. It checked all of the boxes. So then, point is that I'm making here is, after hours, somebody was like, basically kind of patting yourself on the back. All I did was comment that it's still going after hours, right? And made reference to hindsight. That's not the definition of hindsight. The definition of hindsight is, kind of claiming something after the fact without any, prior comments, without any, spelling it out ahead of time. So I want to remind you, if that's you and that's your takeaway, that it's an I told you so, rather than, let me reverse engineer this and find out how I can prevent myself from getting bent in a name like this in the future. That's what I want you guys to be doing. I don't want you guys to be doing like, oh, you shoulda, coulda, woulda, got long. That's not the point. The point is when is hands off important? And you knew that on top, you knew that on GSIT. That's the point. What was it that showed you that? What was it that was screaming at you to not fight that trade? Now, it's easy to point fingers and say, oh, I told you so, this, blah, 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 blah. But that does nothing for you. That just kind of passes the blame off to someone else instead of being honest with yourself. And as traders, you have to be honest with yourself. You can blame others for as long as you want, but it's going to hinder your ability to improve as a trader. And if you notice, and in this particular situation, it's the same person over and over and over and over again. So it's just proof that if you're always going to find some other outside reason for your own failures, you will never succeed over the long term as a trader. And that's really what it's about. Don't create your own truths and then you start to actually believe your own truths. Focus on reality. Focus on what you can do to improve yourself as a trader and prevent these types of situations. And unfortunately, yes, it will happen over and over and over again. If you don't, at some point you'll either get it or you won't. And obviously we're in an industry where a lot of traders fail. So most people don't. They're too proud to just get it. They're too proud to just admit it. And it is what it is. And that's why this career path can be so rewarding, because it's such a high failure rate. So many people try and they can't get a hold of their own emotions, or they're too stubborn, or it's always someone else's fault. So again, it's just a thought. Review, look at yourself, look inner, and I think you'll become a much better trader. Then, let's see. In Chicago, I think there was at least 3 people, and they basically said, I would not be here, as in at the meetup, if it was not for my max stop. There's a couple guys, it was maybe 2 on top and then 1 on some other trade, and they hit their max stop. And their max stop, remember, should not create some emotional like, oh, I can never get back from this. It should be a number that might be a couple days, something that you can just, kind of come back the next day and feel fresh. It's not really gonna be over you and you're thinking about the next trade and be like, oh, I just lost huge. I don't know, I'm a little nervous. Whatever that number is, it should be under sort of an emotional kind of level so that you can just be right back to business the next day. And those 3 traders all did it and all hit it, and they all said, wouldn't have been here. I wouldn't have had an account left. So it's proof. It's proof that it helps. And we are our own worst enemies, and most of us are stubborn. Most of us are too proud to admit when we're wrong. Take that out of your control. Simple. All right. So again, like I said, it's going to be quick. That was that. I'm going to go over a couple screen, just sort of reviews of situations that happened this week. Some I traded, some I did not. But things that I want you to see so that when you see it set up again, you can be prepared for it. And that is the point. The point is not, I told you so. The point is not, I called it. The point is, here is the setup. Here's what we looked for. Here's how it proved. And here's how you could have profited. And when you see that happen again, you will be more prepared because you're reverse engineering, you're reviewing setups that worked. And they're not always going to be the same exact. There's variations of how they set up. And the more that you see, the better you're going to become. So let's get back into the second part of Scan. And as always, I am not a financial advisor. These are not buy or sell recommendations, and this is educational purposes only. So I'm going to go through those examples. I'm going to get right into the scan for the week ahead. And again, if you're looking for somebody to tell you what to buy or sell, you're in the wrong spot. My goal is to put the best quality setups in front of you. If you see the trade and you make the trade, fantastic. If you don't, that's fine. You shouldn't be taking the trade anyway. But you can at least review and understand the why later on. All right, let's get right to it. All right, so as I said, I'm going to go through a couple stocks first, and I'm going to be looking at the computer in front of me just to kind of go over it so you can see certain concepts. One is this PLCE type of situation where this happens a lot of times on the intraday where you see it start to kind of break out. It's been on a nice run, right? And what is it that changes your mind? What is it that changes the direction? And it's something like this candle right here where we have that exhaustion clears out the rest of the shorts and slams back down. That is sort of like a higher day reject, only this is on the daily chart. So this is something that I typically look for, and usually what I focus on is the prior high. So this prior high being the trigger, let's call it about 940s or so, 940. Technically it is 936, right? So if they were to run it 936, 940s, 950s, that could cause everybody that stopped versus the prior high to stop out. Everybody that has their stops there. And so they do that, they clear everybody out, and it slams right back down. At which point I get interested after it's under the prior highs. Another example, GSIT. So we talked about this one in depth throughout the day on Friday. And so the levels that I gave the room, one was 415. The second was 390. And the third, and I hope that you guys do plot these on your charts so you can kind of see it and review it on your own. You know, not everybody uses the software that I use, but I want you guys to get comfortable seeing this stuff on your own setups and your own software. So let me go ahead and zoom in here. And you can see how we've got this consolidation right around this 350 mark. Then we've got this squeeze out. And so at this point, you can start to see this channel form. That's when I start to put those levels in. 390s, 415s. Everything over 415 seems like just like that PLSE chart, right? Where it kind of squeezes everybody out. The more it trades over that, the better, because the heavier it gets. However, if it starts to consolidate at 390s, and every time it stuffs, it comes back and it soaks at 390s, that voids whatever prior stuff move there was. So again, we had that situation happen. 415 triggered right over here, and it slammed right back down, right? So it started to stay heavy, but once again, we revert back to the prior level, 350s. 350s never broke, except for maybe a few cents, but dip, rip, right back over 350s. That voids any of the pressure because dip and rip, we know, we've been over that for the last 3-4 weeks in a row. Then 390 starts to control. So it actually failed to follow through right at that 390 level, had a reject, but then it started to firm up. And it retested. So I always talk about how you have a couple minutes to make the right decision. You can see right here, you had a couple minutes to make the right decision. Sure, you might have had 10 or 20 cent slippage, but it's better than $2 or $4 of slippage. And at which point, when it broke that 415 level, that's when outlier risk is most, there. And that's when you need to be focused, that you're not just trading to trade, you're not seeing what it does, you're not taking today's problem into tomorrow, and all that kind of stuff. After hours is a no-no. When there's float, rotation, and crazy volume, it's a no-no. Next, CVNA. Fantastic trade this week. Very, very clean every single morning. All you really needed to do, and what I did, especially the first time that I traded it, if I can push the button and have this go over there. There we go. Was 1180. So I'm just going to go ahead and put 1180. Next up is PLTR. PLTR is a trade I did not take. However, what do we talk about? We talk about looking left. So look right here. 1031 was the high. And on this candle, 1023 was the high. So 1031 being the last prior high. You come right over here and you look at the top, and it is $10.30. 1 penny off. Does that mean that every single time it retests the prior level, it's going to peak out? No. But the higher it goes, the more it trades over that level. Once it eventually fails, I am interested because we look left and we can make that assumption that it's probably going to have trouble at 1030s. If it starts to firm up and base, hands off. If it starts to peak, I'm interested. So again, not a trade I took. Eric took it, traded it beautifully. Same concept, same understanding. PLX, just a brief review. Guys have seen this. We talked about it last week. Huge retail run up into the approval. That approval comes, it's already baked in. Again, it doesn't mean that it has to pull back. And sometimes they do fall and then squeeze right back up. But a general understanding of the news that was anticipated, how much it had run up into that particular event, can really give you a fantastic trade. So obviously this was a nice fade idea that we already talked about this in depth preparing for this day. And it literally has not gone higher since the approval. So that was something that anybody that watched video last week was prepared for. Anybody that read scans was prepared for. But it's something that's highly, highly predictable. But again, it doesn't mean that you just short every approval. You wait for the trend to agree. Another one we talked about in depth, SAI. And we talked about it after this exhaustion day. And that at that point, I felt like there was a good chance it was just going to unwind. Don't forget the forgotten trades. Price alerts. Stack your price alerts so you remember. And if you miss one, you see it, you see it, you see it, you see it. Eventually, you'll catch it. And then, last but not least, the one that I wanted to talk about was HCDI. Fantastic opportunity. At some point, we'll be rolling out some of the filings features. Right now, I've had custom filings for a few years now. That's why we are so fast in IU, especially in a situation like this. HCDI, you saw how fast we got that amendment. And, that was the difference between an entry and not. And it went straight down $2 or more, maybe $8 to about $5. So almost $3 before it rebounded a little bit. So it's just something that's the edge. What is the edge? And speed is the edge. How fast? And how has it been trading? And does that mean that there's a filing? Does that mean that there is a raise close? Absolutely. Does it mean they're going to do it tonight, tomorrow? Probably. But again, price action has to agree. So being familiar with how HCDI was trading before, then seeing that amendment, starts to check the boxes, and it gives proper edge. So, anyway, let's get right into scan for the week ahead. And as I said in the room last week, it's finally starting to get very liquid in the sense that the setups that I like. IBRX this past week, fantastic. You could really size in whatever you're comfortable with. TIO, same deal. Higher the better. Huge volume, really thick trader. You can size in a lot more than you typically would. NNOX, same deal. NNOX, although I will say it was pretty thin late day. I had sizable from the short entry that you guys saw, but there was a lot of slippage because if you're not there at 1855, when it flushed down to low of days, it was pretty thin back up to 1930s. Comes back to 1890s, pretty thin back to 1930s, 1940s. So you just had to kind of be proactive in the sense of, you might miss a flush to 17, but at least you'll get your fill. And so I filled the majority of it, 1880s, 1890s, 19s, majority, maybe like 40%, I should say, maybe not, 40, 50%. The rest, I had slippage all the way up to 1930s, into the close. So just be aware of that. But I am happy to see these stocks starting to trend that have a real float, and I can size into, and I don't need to worry about a circuit to a circuit to a circuit because, as you know, I stay away from that stuff. The longer they're sideways, the more they've traded, I'm all set. But TIO, we've been tracking this for a long time. I was anticipating and hopeful that we had some sort of 350 sort of squeeze out. We had that on Friday. We'll see if it hangs on. I shorted into the failed follow through setup. This should look pretty familiar. Typical standard failed follow through. If you missed that one, you had another setup under VWAP and then slow, steady fade down. Not much of an stumbling over my words. Not much of an unwind yet. However, I want to stay focused on it. I don't want to over push because I'm going to end up getting chopped up. But I want to stay focused on it. And at some point, the bid will get pulled, the shorts will be done covering, and we'll have a nice pullback. That does not mean that it has to go down. I need to see the setup, and you guys know what the setups are that I discuss. NNOX, higher the better. I think it's pretty clear. You can just draw a quick line. Anything over this level right over here, which ends up being around 2020s, 2030s. 2030s was the level that I had used on Friday for making most of the decisions, except this failed follow-through setup, which you can see pretty clear as day right here. Again, if you don't know what a failed follow-through setup is, save this chart. Review it. Reverse engineer it. This is the point. You're seeing a trade that I took. You saw me spell it out. It's not about I told you so. It's about go back, review it, and see it so that you can anticipate this kind of stuff yourself. And then we had GSIT. GSIT, we'll see what happens. Ideally, it just kind of squeezes out, maybe 859 if we're lucky. Otherwise, just be super cautious getting too aggressive too quickly on this one. And, you know, normally when they are like a tug-of-war type trade, I don't like to be sized up. So sometimes your risk management can be controlled by the amount of shares that you actually borrow. Next up is the failed follow-through section, SPRY. Again, what do you notice? You notice that it's going sideways for hours. You notice where I focus. I focus on the 2 times that it spiked because there was edge that was given. Once it goes sideways and consolidates for a long time, your edge goes down, your risk goes up. So I need to see a big move and quite easily just put a line here, put a line right here. And I need to see blowout over that or unwind under the lower level. CVNA, ideally, higher the better. Failed follow through. It's been fantastic the last couple days. PLTR, same deal. We went over the reason why 1030s made sense. Again, I didn't personally take the trade. But again, higher the better. Failed follow through. And last but not least on the failed follow through drama, higher the better. Failed follow through. So this was a fantastic one. Let everybody else, if it's holding VWAP and it's firm into the open, you have to be cautious. You have to let them do their thing and blow everybody out before you get any size. Otherwise, you become part of the problem. So ideally, we have some sort of push towards 270s and then unwinds. My thought is it probably gaps down. And continuation side of things, I have hook. Doesn't mean that I want to long it, but it's huge. This is going to be a home run trade. It's just about being patient and waiting for it and not forcing it. 180s has clearly been the key. We've talked about that. We have the wicks. We've had wicks all the way up. The more wicks, the more longevity it can have. Just like we talked about with TIO. More wicks and pullbacks that ultimately get saved, the more it needs to overextend before it's going to come back, right? So in this case, I want to see them take out that 2 and blow everybody out, and then that nice clean move comes. And last but not least, IPA. I kept some over. Again, I would say right now in this market, maybe it's not smart to carry things over. Every time that I end up carrying something over, it ends up, gapping down a little bit and doesn't have much follow through. I would have been better off by just selling it all into the close instead of just either half or 3/4 of it, things like that. So I would say that the market environment for swinging momentum has definitely shifted over the last 2 weeks. Just because there's not really a benefit to holding. I haven't really seen any more upside. It's just I'm giving back either profits or I minimize or I turn it into a loser. So I'd be cautious on swings right now. You don't really need it. And as you've seen in the room, my focus has just been, forget trying to get it all. I'm just looking for the best. And, I'm not looking to trade all day. I'm looking to take, for lack of a better word, the easy money. And again, trading is not easy, so don't take it like that. But there is a difference between trying to figure out GSIT going sideways all day or SR, what is it, SRY? I always forget this one. SPRY, right? Sideways all day. So if you're zoned in for 2 hours, 3 hours on that trade, that's what I'm trying to avoid, especially going into summer. So just be aware of that. But otherwise, have a great rest of the weekend. Again, happy Mother's Day. Leave a comment, retweet, like the tweet of the scan, and we'll see you in the room tomorrow.